Happy January 15th. JLD here, and welcome to MicroStrategy Today. In this show, we'll be talking about the wicked, stupid post of the week. We'll be talking about Bitcoin yield, Michael Saylor's number one KPI, a GDP growth chart over the past 100 plus years showing why you and I just need to buy MicroStrategy and hold. And then I have an amazing video clip that really goes into detail about the preferred stock offering that MicroStrategy announced and they'll be doing shortly. Some great details. A lot of people have been asking about it, so we'll dive into that. So let's get going. So here we are. This is MicroStrategy Today's our Twitter page right here. As you can see, I started to post every single day of the trading year. I'm going to do a $210 buy of MicroStrategy, and I'm going to hold myself accountable, and I'm going to post it in my tweets as well. So go ahead and follow if you haven't already. MicroStrategy, $210 being a little homage to 21 million Bitcoin. So let's get going. Now, what exactly is the wicked, stupid post of the week? Well, I'm from New England, so we like to say wicked a lot. So I'm going to bring that into the show. And I want to have a theme for every single week. Weekday and actually weekend as well. So Mondays is going to be Moonshot Mondays when I talk about the catalyst. Tuesdays is Tracker Tuesdays where I'll be talking about the MSTR tracker in detail. Wednesdays are going to be wicked, stupid post Wednesdays. And this is the one for the week right here. MicroStrategy shares at risk. Here are the causes. And I'm not going to go into super detail in this article. I'm going to post it in the show notes if you want to go into super detail about how stupid this post is. But it talks about the debt of MicroStrategy, which they completely get it wrong. The performance of the stock, the risk for Michael Saylor society, the correlation with the price of Bitcoin. Every part of this post is wicked stupid. And I just wanted to let you guys know that there's so much bad information out there. There's so much FUD, fear, uncertainty, and doubt that's trying to be spread by people who are shorting the stock, by people who just are FOMO. Their fear of missing out has made them cope unbelievably hard because they missed this trade. They continue to miss this trade. They don't see it. They don't understand it. And when people don't understand something, they hate it or they're scared of it or they just don't want it to succeed. Any of those emotions turn into stuff like that. But that's why when you continue to watch MicroStrategy Today, I'm going to be bringing you what I consider the real information around MicroStrategy, the good and the bad, because it's not always going to be all good. There's going to be some struggling, some challenging times, but I have faith in Michael Saylor. I have faith in MicroStrategy and their board and what they're doing going forward. So it's going to be, in my opinion, a great year. And on that note, let's talk about Michael Saylor posting Treasury options last week resulted in a Bitcoin gain of 1,440 Bitcoin, the Bitcoin yield of 0.32% versus 470 Bitcoin at 96,000 per Bitcoin. This translates to a shareholder value creation of $138.2 million. So Michael Saylor is going to start posting this every week where he's going to share with us what we as the shareholders gained in value. This week, it was shareholder value creation of $138.2 million. MicroStrategy and Michael Saylor created that in the past week with their strategy, with their operations, with their Bitcoin yield, continuously adding value to you, to me, to the shareholders. So I love this, and I'm going to keep on tracking this all year, all decade. Chris Miller says MicroStrategy is now worth 2.1% of all the money in the world. This was in response to Michael Saylor saying Bitcoin is worth all the money in the world. Well, guess what? MicroStrategy owns 2.1% of that, and it's only going higher. And you're a shareholder of that. Chris also says, one of the most profound charts I've seen over the past few years is this one. It illustrates that human progress is an unstoppable force that grows exponentially. And as a result, market drawdowns are simply temporary deviations from the underlying trend. In each case, the economy ends up exactly where it would have been had the drawdowns never occurred. This is why, as an investor, you and me, time is your greatest ally. All you have to do is buy the best assets in the world and literally do nothing. That is why I do believe so strongly in it's not timing the market, it's time in the markets. If you have a long-term time horizon and you own something like MicroStrategy, like Bitcoin, like the best assets in the world, just sit back and enjoy the day-to-day life that you have. And we're going to see some great price appreciation, in my opinion, in the upcoming years. I'll zoom in on this chart real quick. You can just see starting back in 1920, yes, there are some dips, but over time, it's been up and to the right. All you need is time. The Bitcoin therapist says, wake up, Neo, the Matrix has you. And here's Forbes finally coming around to the reality that the system is rigged. Bitcoin is how you get out. True story. Bitcoin Archive says, breaking, publicly listed AI company Genius Group to raise $33 million to buy more Bitcoin. Adoption is growing. Again, this is just one of unbelievable amounts of announcements that will be coming in the days, weeks, and months ahead. I mean, after January 20th, I think people are going to just completely start saying, okay, now we've got the full force of the US government behind this. Let's go. So get excited, strap in. I'll be reporting it every step of the way. I wanted to share this as well. Jeff wrote, Punter Jeff specifically, Wright brothers' first flight, 1903. Humans stepped on the moon, 1969, 66 years later. Satoshi's invention of Bitcoin in 2009 marks a revolutionary new era in money and capital. We're just 15 years into this journey, and the next 50 will reshape the world as we know today. I think a lot of you probably can think back and remember that video of the first flight by the Wright brothers, where they literally were in a field and they just got off the ground like 15 feet, kind of coasted for maybe 100 yards, and then kind of crashed back down to the earth. Can you believe that just 66 years later after that, we literally landed on the moon? I mean, human progress can be amazing at times. And this is a scenario where timing the markets is not, that's not the point. It's time in the markets. Let's just sit back and wait. Now, I'm getting a lot of questions from watchers of this channel in the comment section of, tell me more about the preferred stock. How is the preferred stock going to work? What's the dividend going to be like? There's a great clip by Ben Workman I'm about to share with you right now. But this is just to show you, I read the comments, I watch the comments, I engage with the comments. So put in the comment below where you're watching from, any questions you have, any comments you have. I'm keeping all this data in my mind. And when I come across things that answer those questions, boom, I'm going to post it here in MicroStrategy today. So I would love your comments about where you're watching from, questions that you have. I will be answering them as I can going forward on this daily show. So Ben, take it away.
Yeah, so they'll definitely get dividends. I know that you've seen a lot of noise on the internet about, well, they'll just command 0% on the preferred. Very unlikely. Very unlikely. I actually think that you're going to see a very respectable rate on the dividends. They're basically stepping down the volatility another rung from even where the convertible bonds are. So to do that, you got to have a couple things, right? You really got to create an instrument that performs as a fixed income instrument across a long period of time to flatten that volatility out. You need to make it so that the equity component doesn't kick in as early as it has on the convertible bonds. So that means a couple things. One, you want people buying the preferred stock because it's paying out that fixed income component, right? The dividend. That's what's going to attract these big pools of capital to this public offering. So I think you're going to see it 7 or 8%. Then they've got to engineer a long time period where that fixed income payment is going to be in place, because you want whatever that conversion price is to be very difficult to reach. So I think you might actually see something like a 150% premium on the conversion price. So say the stock's at 350, that would mean that the conversion price might be at 875. And then from there, the early conversion triggers another, it's 130% of the conversion price, which is 1137, something like that. So the stock price really has to move. And the intent of that is you want that price to be further out of reach, because you want a longer time period for that product to act like a fixed income product. That's what's going to flatten the volatility on that product out. So the structure is going to be different. But the other thing that you have to account for is, because they're raising capital at that 150% premium, initially it makes it wildly accretive to Bitcoin per share, right? Mathematically, it's a home run. But what you have to factor in is, at a 7 or 8% dividend, they're paying $140 to $160 million a year in dividends. So the next natural question is, well, where's it coming from? Right? The
Yeah,
business doesn't
that's
throw
my
off that
question.
much cash. The reality is it's going to come from the equity, right? You're probably going to have to raise that through ATM. So the ultimate, in the end, the Bitcoin per share increase or the Bitcoin yield that's going to be generated is going to be a combination of that premium less whatever they have to issue to fund these dividend payments. So the math that they're going to have to do is going to have to make sure that in the end, they're going to end up in a more accretive position than they would if they just issued a straight convertible bond, right? So they've got some wiggle room because you've got 150% conversion premium, right? So now, say they took 25% of that to use equity to fund the dividend payments, you may still end up way ahead of what you even get on the convertible bonds. But it's going to be a tough one to message to the market in terms of how you do it because people aren't going to be able to understand. And when you first give your announcement saying, here's the Bitcoin yield we've generated, that's not the end Bitcoin yield because we don't yet know how it's going to play out over years. The bet is that the stock price continues to rise significantly, so they have to use far less shares to fund those dividend payments. You're also going to get things like these convertible bonds start rolling off, the ones that are carrying coupons. So they'll probably get back to having about 60 million a year in free cash flow from that. So they're really plugging that gap as long as they can keep getting 0% on the convertible bonds. So the structure is going to be really interesting. And part of that flattening of the volatility is they're going to have to essentially, I'm going to say guarantee, but I'll tell you in a minute why you can't use that for preferred stock. But they're essentially going to have that no call period probably be something like 5 years before they can get out of this, before MicroStrategy would be able to force the conversion if it hit that 130%, because the buyers are going to want to know that they've got a long time period where they're going to collect these dividends so that they're treating it as a fixed income instrument. So, but the reason you can't say guaranteed on the dividends is because guaranteed dividends create liabilities that impacts your leverage ratio. They have to be discretionary dividends, right? They're intended to be paid, but they can be suspended if they needed to be. That'll probably be the structure in the end, but it's going to be really interesting to see. They have to get their messaging down so they can kind of model out the expected Bitcoin yield out of this because that first transaction isn't going to be the whole picture. So this is probably a one-time preferred dividend for now or preferred stock offering for now because they're going to need that dividend payment. So this isn't something they can come back to the well all the time. This is probably like a once every, 3 to 5 years, depending on what they set that no call period at, that they'll be able to do these. So they've got to be very careful with how they structure these things and then how they message it to the market.
And there you have it, another episode of MicroStrategy Today. I hope you got value from this episode. If you did, give me a like, give me a subscribe, and I would love a comment as well, because again, I read all of them, where you're watching from, what questions you have. We make it happen. Remember, this video is just my opinions. It is not financial advice. Here's my Twitter account right here. I'll be posting some great stuff about MicroStrategy all day, every day, including my DCA, my dollar cost averaging into it and other things. Because remember, there is no second best.
What's the second best? There is no second best.